G'day traders, John Howell here from tradinginvesting4u.com. Anything I do say in this video is general advice only. I do understand, right, that the market is risky, and so this video is not to be taken as personal advice, but make sure you're using this as a guidance and as a tool to help you when it comes to your overall trading. Okay, alright, fantastic. Let's get into the market right now and let's see exactly what's going on and what's happening. But with this video, what I want to do is I actually want to help you out, and by giving you something that that forms sometimes in the market and how you can use that to potentially make some profits out of the markets. Okay, and this pattern here is what we call the sideways channel. Okay, so you can see here I'm looking at a stock called CHK. Okay, I can't pronounce its name. Chesapeake or something. Chesapeake. Let's call it the energy group. Okay. So one thing I've noticed time and time again when it comes to markets that go sideways for quite some time, that when they break out of that sideways movement, they generally go in that direction. But not only that, but there's also a high probability of having a target projection of where it's likely to go. And this is how you do it. If the market's going sideways, like you can see right now, okay. If you can see when the market's going sideways, we have this. We have the top of the resistance point up here, and then down the bottom here we have the bottom of the support level. Okay, the bottom of the support level. So if you ever see a market that's going sideways like this now, what you need to do is you need to identify the high of the channel and the low of the channel. And the longer this goes, the harder the breakout's likely to be. Okay, now we don't know where the breakout's going to be, but just bear with me for a minute. Now let's just say, for example, the breakout is to the downside. Okay, let's say the breakout is to the downside. It breaks out of this and it opens and it starts to break down below this here. Okay, then where is it likely to run to? Then what you need to do is let me just delete that. You need to grab a line, and we need to identify the high of that. As you can see right now, what am I doing is I'm just drawing a straight line down. Okay, a straight line down from the point of this resistance point. Okay, so this point up here on the resistance point, down here to the support level, down here to the low of this channel. Okay. And all I'm doing is I'm going to grab that. I'm just going to extend it down through here. Okay, so let me just bring this up, and I'm going to extend this down. And where this gets into, which is now around the $15 mark, 15, round about the 15.20 level, 15.21 level, $15 to 15.20, where this sort of box is. This is where I see the first target hitting. Now you can do the exact same. If it broke to the high side, you take the exact same length between the resistance and the support, you project it to the high side, and then you say, okay, then the market is likely to at least get to the $19 level before it runs into any problems. Okay, as a short term. Now this is talking a short term trading opportunity, but I've noticed this time and time again. And then what you see is that it hits $14 level, but then if the market does break down, then it's likely to get to $15. And then if it does keep going through, then we're likely to see around about the $13.50 to $14 level. That's somewhere around about there, the $14 level, being hit as well too. So if we get some steam on the downside, so there's a bit of a tip, a bit of a way you can actually view the market. So whenever you're viewing stocks or trading, just use this in your guidance, use this in your toolbox. Okay, once again, whenever you have a market that's you can clearly see going sideways, okay, market's hitting resistance, hitting support, hitting resistance, hitting support, hitting resistance, hitting support, you can see it's going sideways. Identify the top of the channel, identify the bottom of the channel, grab this point from the high side of the resistance down to the low side of the support, and then project it up and say, if it does break up, then we're likely to run to here. If it does break down, then we're likely to run to here. Does it make sense? And plus that also can give you quite of a good trading opportunity as well too, when it comes to risk and reward management. Let me show you what I mean here. If we start to break below here, okay, and we get in, say here around $16, well then our target is where? Say $15, right? Our target is $15. But if this thing then turns, if this thing turns around and starts to get back above this support line here and gets back above here, well then you're out here, right? You're out here. So your risk could be like your profit could be $1. Your profit target could be $1 if you trade in the stock, and your loss could be 50 cents in this example. Okay, as an example here, you might have a different regime. You might be going for the $14 target. I'm not sure. But as an example, this can also help you. Now, I personally trade options, and options are a fantastic way to trading. Now, I'm not telling you what to do, I'm just telling you what I do, and then you obviously need to make sure you educate yourself before you're trading any of these, okay? So, I hope you've enjoyed this session. Once again, this sideways channel, I've noticed time and time again, over my almost 10 years now of trading career, I've noticed that this projected channel, this projected target really does help and really does work really, really well in the markets, okay? Identify the high side, identify the low side of the channel, and this only works not in, because there's a couple of channels, okay? You have your upward channel, and I've noticed this doesn't work for an upward channel, and then you have your downward channel, and I've noticed this doesn't really work for downward channel because you can't really project it. But when the market's going sideways like it is right now, like this sideways channel like it is right now, and it's bouncing like this, and we're stuck in this sideways movement through here, okay, through here, then use that projected target, so if it does break out, we see the good thing about this is we actually don't know where it's going to break out, right? So by actually knowing, so you know, we don't know where it's going to break out, but if it does break out, where is it likely to run to? And this is giving you a heads up even before, so you don't know what's going to happen, but when it does happen, you know how to respond to the situation and know where it's likely to run to. So this is John Howell here from tradinginvesting4u.com. If you want to learn more information or more tips and guidance around how we view the markets and the software and strategy we do, then head on down to tradinginvesting4u.com. Also, make sure you check us out on our Facebook, which is facebook.com/share trading mastery. Also, we're also putting regular articles and updates on our Twitter feed as well too. So that's twitter.com/John Trader. Okay, guys, this is John Howell here. I'm out of here. No matter what happens, say this yourselves every morning, every afternoon, and evening, and that is success can be yours if you go claim it. So step up, take massive action, and face your fears today.